Straw buyer mortgage scam. A straw buyer mortgage scam is a fraud scheme where an individual with good credit is recruited to obtain a mortgage on behalf of someone else, typically a person who wouldn't qualify for a loan on their own. The straw buyer essentially acts as a front for the real buyer. Here's how the scam typically works and its consequences. 1. Recruitment. A scammer, often a part of a larger fraud ring, approaches an individual with good credit, the straw buyer. They may be promised a payment or a share of the profits in exchange for the use of their name and financial information. 2. False application. The straw buyer applies for a mortgage, often with falsified information about their income, employment, or intent to occupy the property. They are instructed to act as they are the true purchaser. 3. Loan approval and payout. Because the straw buyer has a good credit history, the lender approves the loan. The mortgage funds are then released at the closing of the sale. 4. The fraudster's profit. The scammers, including the original real buyer, take the money, often after artificially inflating the property's value through a fraudulent appraisal. 5. The aftermath. The scammer promises to make mortgage payments, but they often pocket the money and the payments eventually stop. The consequences for the straw buyer. Being a straw buyer is not a victimless crime, and the consequences for the individual can be severe. Even if they claim they were unaware of the full extent of the fraud, they can still be held legally and financially responsible. Financial liability. The straw buyer is the person legally named on the mortgage. When the payments stop, the mortgage lender will pursue the straw buyer for the full amount of the loan, which can be inflated value. This can lead to foreclosure, loss of their good credit, and even bankruptcy. Criminal charges. Participating in a straw buyer scheme is a criminal offense. A straw buyer can face charges for various forms of fraud, including mortgage fraud, mail fraud, or wire fraud. These charges can result in substantial fines and a prison sentence. Red flags to look out for. Being offered money. A common red flag is if someone offers you a fee to use your name and credit information to obtain a mortgage. Encouraging false information. You are asked or encouraged to include false information on a loan application, such as an inflated income or the intention to live in a property you have no plans to occupy. Leaving blanks. You are told to leave signature lines or other important sections on the loan application blank for someone else to fill in later. Unusual property details. The loan amount is significantly higher than the actual value of the property, or the seller or advisor discourages you from seeing or inspecting the property. No negotiation contracts. The purchase contract has no conditions or counteroffers, or contains unusual statements like, "This is a private sale." For more investment and financing videos, we welcome you to subscribe to our YouTube channel. Thank you.